The collapse of reverse mortgage funding and Ginnie Mae's takeover of the defunct lender's secondary market portfolio of HECM mortgage-backed securities, or HMBSs, has triggered scrutiny from one U.S. senator. Reverse Mortgage Daily obtained a letter from Senator Mike Braun, the ranking minority member of the U.S. Senate Special Committee on Aging, and a letter to Ginnie Mae President Alana McCargo. In the letter, Senator Braun questioned what Ginnie Mae is doing to ensure the ongoing viability of the HECM and the HMBS programs. Fortunately, Senator Braun sees the value and importance of the HECM program to serve the needs of seniors, saying, reverse mortgages can be a lifeline for older homeowners needing access to cash during retirement, and recent failures threaten the financial security for hundreds of thousands of seniors. Mismanagement of this program could lead to the collapse of reverse mortgage market that hurts both seniors and taxpayers. Senator Braun also asked for the specifics of proposed policy solutions to safeguard the reverse mortgage market in the future. Braun did recount the situations that ultimately led to the bankruptcy of RMF, its extinguishment from the HMBS program, and Ginnie Mae's seizure of the company's portfolio, which he says grew Ginnie Mae's balance sheet overnight by 50%, while the agency scrambled to service a large and seasoned reverse mortgage portfolio, says the letter. This led to an investigation by HUD's Office of the Inspector General, or OIG, in late 2023. Braun added that deeper congressional scrutiny is also warranted for HECM program issues stemming from these events. Braun does seek responses from Ginnie Mae, several questions regarding the stewardship of the HMBS program, particularly how to understand how seniors were impacted by that glaring failure. Now, the senator has requested answers to his questions to Ginnie Mae by May 10, 2024. Senator Braun does have a robust business background, being the founder of Meyer Distribution, a nationwide third-party logistics provider. A Journal Courier column shows a 2023 report from the investment firm Vanguard estimates that about a quarter of Americans age 60 and older could move to cheaper housing and free up equity in their homes to help boost their retirement savings. And making retirement more secure and enjoyable would be the end result. Now, those with home prices near the national median could have cleared about $99,000 in equity on average in 2019. That was the year the data was gathered. How much it is now is probably a lot more. Homeowners in top price markets could have cleared an impressive $346,000 on average, says the study. We're at the peak of where housing prices have been ever in history, says Matthew Gottschall, a certified financial planner in Westlake, Ohio. It's been more and more common for people to weigh the option of, do I downsize? Do I take the equity that's grown in my home? Selling and potentially downsizing your home and pocketing that extra equity could be a good strategy in a market where you can make it work. Now, that's going to be easier in a pricier housing area when you might be able to trade your high-valued home for a smaller place in a more affordable market. Now, Vanguard's analysis noted that the relocators in California, for example, were more successful at clearing equity in their homes than those in lower-priced markets such as New Mexico or Texas. And selling property really isn't a slam dunk, especially in today's market. Just because you want $850,000 for your home, the market may not care, says Andrew Herzog, a CFP in Plano, Texas. You may be in the mood to move, but if no one wants to buy your place in the first place, you've got nothing. Well said. Also, if you're picking up a mortgage on a new home, there will be closing costs, and rates are likely much higher than they were when you last purchased a property or refied. Now, all these numbers could chip away at your eventual net sale profit. We're at a place where 30-year mortgages are at 6.5% to 7%, Gottschall says. It could very well mean your monthly payment on a much lower-priced home is almost equivalent to the home that you're in right now. Now, this could be a prime opportunity for those relocating rather than sinking all of their profits from the sale of their previous property to use a HECM for purchase, where they can put down a sizable down payment, but then take the rest of those funds that they would have put into their home and keep them liquid for emergencies or other purposes to help age in place in retirement. And it's time again for our monthly installment of Reverse Market Insights Market Minute with John McHugh. John, thank you for joining us. What is going on in the HECM marketplace today?
Hey, thanks, Shannon, for having me back again this month. Really appreciate it. I thought I'd start this month off a little different. Usually I end my segments with case numbers. I thought I would actually start this month with case numbers. When we start looking at January case numbers, which are the most recent case numbers that we have, you can see that case numbers actually rose nearly 30%, 28.7% to over 2,900 case numbers. In fact, new equity takeout, that's essentially anything that's not purchased or HECM refinance. That grew 23.5% to over 2,400 case numbers. Purchase gained ground up 13.4% to 135. But the refinances are the ones that's really interesting here. They rocketed almost 90%, 87.9 to 374. This is kind of speaks to two different things, I think. One is the MCA, right? We're looking at January endorsements, and with the higher MCAs, and then with the 10-year CMT being at the highest it was in October, we're kind of seeing this perfect storm for January where we're actually seeing the highest refinance case numbers since August of last year. Now, just be mindful as we start looking at these, right? There are going to be people who are going to be qualifying for these, but we've seen what happens when we build businesses around just solely refinance. It's great to help out those people who qualify. It's just really difficult to maintain a business that way. So it's going to be very interesting to see both as rates continue to move and fluctuate, to see what happens to this number going on the rest of the year. Continuing on with January, we can actually see that the retail segment dropped 30.7%, wholesale grew 2%. The overall endorsements dropped by 1.6, so a little flat on the month. But what's going to be really interesting and a little more upsetting is as we move into February. So endorsements dropped nearly 12% to 1,900 loans. In fact, all of the regions were down on the month. Pacific Hawaii had the smallest drop, but which is actually important because this is also one of the largest regions that we track there. So as we look at the top 10 lenders, we actually have two that grew. We had Good Life TMAC that grew 38.3% to 65 loans, and Longbridge also grew 1.2% to 261 loans. Now, as you look at this data, you're going to see three that are showing up, but keep in mind that Cherry Creek was acquired by Guild. I believe what's happening here is these two loans backfilled in for December, which is showing the positive here. But really, we only had two that were up on the month. So we'll keep an eye on case numbers. We did have some of the higher numbers that we've seen since October of this last year, or sorry, of 2023. We'll see how much of that continues to backfill in. Hearing lots of good things from people out there as far as numbers that they were closing in February. Keep in mind, fundings don't equate to endorsements. So we'll just have to keep an eye on this and see how things track to try and figure out how 2024 is going to shape up. But with that, keep it up, guys, and we'll talk to you next month.
And that's a wrap for us here at HECMWorld Weekly, the nation's only weekly podcast for mortgage professionals that brings you curated reverse mortgage news. We also have an audio companion to this video podcast, which you can find on Spotify, Apple Music, Podbean, and of course here at HECMWorld.com. Thanks again for joining us, and be sure to return next week for more reverse mortgage news on the go.